Celebrating 30 years of phenomenal trend forecasting, 5 times a week, Monday through Friday. Here's Gerald Celente with today's trends in the news.
Hi, this is Gerald Celente. It's Thursday, January 11th, 2018. And here are some of today's trends in the news. On the market front, over there in Asia, up. Over there in Europe, down a bit. Yep. And here in the States, boom, boom, bam, new highs. And oil, whoop, oil's up, gold's up, and poof, Bitcoin's down, big down. So what's going on here in the States? Dow spikes 205 points to record close. That's right. Analysts and investors, they're looking at Donald Trump's tax cut that will slash corporate tax rate, as you know, to 21% from 35%. The tax rate that companies actually pay may even be lower than 21%, according to some research by Urdani Research. So more profits coming in. And what does that mean? More profits, more stock buybacks. End of story. Maybe and maybe not. And we'll get to the maybe not in a minute. But oil prices, they hit a 3-year high, eased down from a little bit above $70 a barrel over there in Brent, came down a little bit, still in the 69. And again, most people are saying, as we're saying now, we're in this new range. This is it. But it can go higher as things heat up in the Middle East, down in Venezuela, and what other oil country that's having a lot of internal problems. So where we are is where it's at. And again, we had a very cold winter here in the Northeast, and that's driven up demand. And it's also slowed down pulling the stuff out of the ground and going to the refineries. So we believe we're near the peak of oil at the prices that it's at. Not peak oil, of course. And gold. Gold nears 4-month highs because the ECB came out today and they said, the European Central Bank, we're going to cut back on this stimulus program. And that made the dollar weaker and the euro stronger. But we don't see that standing very long. So yes, they're going to be cutting back, but they got their own problems there in Europe, and we don't think the euro is enough to drive the dollar down. So gold, it's at a 4-month high right now, and it's pretty solid. But again, as the dollar gets stronger, gold gets weaker because U.S. bonds sell off as investors fear faster retreat from crisis stimulus. Crisis stimulus. Yeah, the panic of '08 to give all the money to the banksters. That was the crisis. The banksters will get poorer. Yeah, because it didn't enrich any of us. That's the fact. Only the 1%, the top 10% gained. The numbers are there. Again, in the USSA, we got 3 people who got more money than 60% of our population. You got 8 people worldwide that have more money than half the world's population combined. Crisis. A crisis for the criminals. And it goes on. The global government bond market has started 2018 on the back foot, and yields rose sharply on Thursday after data showed the Bank of Japan slowed some of its long-dated bond purchases. That stoked speculation that the Bank of Japan would join with the European Central Bank and the U.S. Federal Reserve in scaling back, you ready? Stimulus programs this year. Stimulus to stimulate the equity markets. So again, we have valuations near all-time highs, particularly here in the States. You've seen a lot of money going to emerging markets because the valuations aren't as bad. But if the dollar gets too strong and the stimulus starts stopping, that's when you're going to see the market crash. Goes on to say that this has lent weight to bearish sentiment. Central banks were shifting to an era of quantitative tightening. Yeah, from quantitative easing to quantitative tightening. And remember, these little slime balls at the ECB have been buying corporate bonds and junk ones like that company that just went bust. Hundreds of millions of dollars worth into a failing company. This isn't capitalism, it's fascism, the merger of state and corporate powers. 2018 will become a turning point in the post-crisis era of ultra-stimulative monetary policy. All right? So there's where we're going with the markets. The fears are starting to set in. Economists have been bemused by the lack of price and wage rises despite the tightening job markets on both sides of the Atlantic. What are you bemused about? You're working for a plantation owner. Plantation owners don't give the slaves in Slavelandia raises. What are you bemused by? All the dough's in the hands of the few, man. And what is Bezos worth now of Amazon? What, $106 billion? And what do they give for peace? Gosh, that's what they give. All of them. All the billionaires, they give nothing for peace, only more for their pockets. Bemused. Grow up. Investors fear end of binge on bonds. For nearly a decade, central banks around the world have been the biggest buyers of bonds, sending interest rates plummeting and stock markets soaring. Yeah, no kidding, man. Now investors are starting to worry about what would happen if the richest nations start to scale back on a buying binge that most of them began to stimulate economies hurt by the global financial crisis. This is the crap out of the slimy New York Timers by Landon Thomas Jr. Yeah, Jr. Didn't stimulate the economies, Jr. Could you add up to 2% GDP growth, Jr.? Because that's what we had in the United States up into this year. And maybe you can't count good from 2008 to 2018. Stimulate the economies. This has been one big ripoff to enrich the rich in the neo-feudal society. The most immediate fear, a sharp fall-off in bond prices, would rattle equity markets that are now trading at record highs. Last bears standing pin hopes on crisis year. So here a couple of people are saying things are going to get lousy. Now as central banks prepare to pull back from ultra-loose monetary policy and vast bond buying programs, the last bears standing are hoping that their predictions will finally come true. Again, it's been nothing but a scam. I read to you the words. I read to you the words. The words are very simple. Vast bond buying programs and ultra-loose monetary policy. Zero negative interest rate policy where we, the little people, have no money to put in the bank because we get nothing back for it, but they get the money to do their stock buybacks. So what's going to keep this market going? The cheap dough that's going to be back into the corporations because of the dirty deal that Trump just did to make the multinationals and the biggers bigger. So they get all this dough, repatriate a lot of it from overseas, pay barely nothing in taxes on it, and invest it back into the markets. That's what's boosting it. However, they're going to be raising interest rates across the board. The Bank of Japan, ECB, USSA. If those interest rates go too high, this market goes down. Yen's strong advance signals growing investor expectations of policy tightening. A sharp move for the yen is a sign investors are growing confident that G10 central banks will be tightening monetary policy seizing on supporting evidence from data and statements from policy makers to drive currencies higher. Okay? The higher the currencies go, particularly the dollar, the lower the markets go because it takes more dough to buy back stocks and do merger and acquisition activity. End of story. Because global debt hits record, you ready? $233 trillion. It rose to a record in the third quarter of 2017. And speaking of debt and money, over there in China, as we've been saying, hey, what's one of your big trends that we've been writing about? Going cashless. The cashless society has finally arrived in China. And that's right. And companies like Alibaba and Tencent are elbowing aside banks to take a growing role in daily commerce. And what you do is you pay with your app. And such payments in China now total $9 trillion. Way ahead in the cashless society, Alipay apps. Here, take a look at this chart. Look at that. Oh, you can't see that little blue dot down there at the bottom? That's what the United States is doing in mobile payments. Basically, nothing. Way behind the curve. The payments haven't been required to go through the central bank's clearing system, making it harder for China's monetary authorities to follow capital flows. Yep. So, going around the banksters, just like those cryptocurrencies. But boy, they're clamping down on those. Yes, yes, yes. What do we got here? South Korea plans to ban cryptocurrency trading, rattles markets. China cracks down on Bitcoin mining in latest rejection of cryptocurrencies. China mines about 3/4 of the world's Bitcoins. And now they're closing down those mines. So this is something to pay attention to. And speaking of China, and one of our other top trends of 2017 was Silicon Valley Rust Belt 2.0. Now that was over a year ago because we come out with our top trends in December. And this is January. Chinese workers abandoned Silicon Valley for riches back home, an exodus triggered by abundant capital, growing innovation, and flourishing career opportunities. Bloomberg News. Hey, Bloomberg. Pip. You guys are late on this one, as most of the media is. The TrendsJournal, the only place where you read history before it happens. And on to some international news. Over there in Spain, Catalan parties endorse ex-leader. Well, that's all right. They won't give them their freedom. They're a good democracy over there. The people's voice doesn't count. We'll see where that goes. Hey, great news. Me too. Me too. Silent on this, man. Yeah, sexual harassment is one thing. Mass murder, you don't say anything about. No, no, no. Saudi airstrike hits North Yemen market, killing 11. 11 today, 10 yesterday, 100 last week, 100, nobody cares. Doesn't make the news. As does not Tunisia unrest breaks out over austerity. Over 200 people have been arrested after clashes with police. A couple of people dead. But hey, how come Trump's not tweeting? Trump's not tweeting about Tunisia. No, Tunisia doesn't count, and neither does families fear no justice for victims as 31 die in Honduras post-election violence. The people are still unhappy over there about the rigged election, but remember, Honduras is our friend. They voted along with Trump with the UN to say Jerusalem is the capital of Israel. Sellouts. They don't care when murder is from your friends in Murder Incorporated. No, no, no. And then finally, Apple. Investors prod Apple on child's phone use. A public health crisis of youth phone addiction. Yeah, investors. You think they're going to do anything about this? And they're not going to do anything about put your cell phone down and keep it away from your pillow. The California Department of Health is advising. Talking about all the problems that we've been talking about with cell phones for years. And you know one of your big trends, clean phones. It's coming soon. More about it in your next Trends Journal. This is Gerald Celente, and that's some of our trends in the news.